Welcome back. You're watching Business Morning on Channels Television. And of course, it's time for us now to talk about commodities. What is the market looking like? But today we're focusing on domestic oil as we're vis-a-vis what's going on the global market. And Okwemi Oguntade, who is a senior economic research analyst at financial derivatives company, joins me now. Good morning to you, Okwemi. So
good morning, Harriet.
It's been a very interesting time. Most of the times our conversation, primarily is focused on domestic agriculture, but, with recent developments, having the price of diesel coming up to as high as 300 naira to a liter, you have kerosene at almost 500 naira per liter, and not to mention cooking gas. These are some of the burning issues that were highlighted in FDC's report for today.
Yes, we see diesel prices at, like you rightly mentioned, about 260 naira for a litre, and then we've also seen kerosene prices increasing as well. And it appears there's a bit of a panic attack in the market because a lot of people are going on to say there's a potential or there's an imminent fuel shortages coming up. But looking at what the independent oil marketers have said, what we have here is that they have been receiving supplies from the NNPC, and NNPC has made no mention to the fact that they haven't been able to, access forex to import premium to import petrol. So I think at the end of the day, I think what's going on in the market is that there's a lot of anxiety as to where to get, petrol from, and a lot of people are worried that, the landing cost the other day was about 165 naira for a litre. So how come, the oil marketers are still selling at 105? Are they selling at a loss? But the important thing to note is that the NNPC is the one accumulating all these losses, so to speak, because most of these marketers are getting their products from the NNPC.
Yeah, because it's even in most of the dailies for today. The Executive Secretary of Major Oil Marketers Association of Nigeria, Obafemi Olawore, was on Sunrise Daily on Monday, and he talked a little bit about that, trying to assuage and confirm what the NNPC has said, that there's no need for panic because at this time a lot is being done to ensure that there's enough liquidity in the system, so to speak. But then another good news is that the Focados pipeline is to reopen 1 year after, and that's Seplat actually mentioned that yesterday.
Yes, and that's extremely good news. And we know that last year, February, there was an attack to the pipelines by the Niger Delta militants, and they did try to restore production sometime around October, November. But then a week or 2 weeks or thereabout, we had another attack to the pipeline again, so they had to shut it down for repairs. So now what they're saying is that by the end of second quarter 2017, we should expect the Focados pipeline to reopen. But obviously, we still have to consider the fact that the militants have not been, completely satisfied in terms of their wants. And if we're going to move forward and ensure that the pipeline is not destroyed again, or there are no sabotages to the pipeline, then the government has to ensure that the militants are taken care of.
And what does this do for our exports? Because right now, oil prices is at $55.23. So we have as our benchmark for 2017, according to the review document by the National Assembly, 42.50. So what does this do for us?
Well, in terms of what we know is Nigeria is more sensitive to oil production, and we know the Focados pipeline has the capacity to the export terminal has a capacity of about 200,000 barrels to 400,000 barrels, and so if we're having oil prices at they're currently trading at about $55 per barrel. So that's definitely good news for the Nigerian government in terms of inflows coming in through oil receipts.
But taking a look now at the bigger picture, we still see that U.S. production is expected to maintain upward trend. Is that good news or bad news?
Well, that's really for Nigeria. That's not good news because if U.S. production is increasing, then we would see that affecting or weighing on oil prices. So far, we've seen that rig count in the U.S. they've increased to 566. This is the most they've achieved since November 2015, and we've seen that this trend has been going on for a couple of weeks now, about 8 weeks. We've seen that consistently every week we have an increase in U.S. oil rig count, and now they're currently at about 8.96 million barrels, away from the 9 million barrels that they achieved a couple of years back. So, but the important thing to note is that we have an OPEC deal, and the OPEC deal is for, you know, output to be curbed by 1.8 million barrels per day. So what we analysts are hoping that even if the US decides to ramp up production, it's not sufficient to, you know, to offset the curb in production from OPEC producers. And so far, we've seen that, you know, the OPEC producers are committed to this output curb. Looking at the, you know, the OPEC monthly reports, we've seen that Saudi Arabia reduced production and other countries as well, including Russia.
So do you think oil will continue to trade within this band? Because since since OPEC made that decision, we've seen the oil prices hovering around $54 to $56 per barrel. Do you think it will maintain this band?
Yes,
and for how long?
I think for this week, so far for this week, I think that oil prices are going to remain within the band of 50 to 55 barrels per day. We've seen that this is what 50 to 55 dollars per barrel. We've seen that this is a trend they've maintained so far since, you know, November when the OPEC deal was made. We've seen that, you know, oil prices shot up to above $50 per barrel, and they haven't gone back down since then.
What do you think might make this price not to remain in this band? Because it's a very uncertain market, it's very volatile. We could have issues from Iran, we could have issues from Iraq, or even Kuwait.
Yes. So at the end of the day, if we're looking at the prices, if there's anything that's going to cause prices to come to return back to the days of about $40, $45, or even $35, it's all about production. If we see, you know, if the US beats our, you know, expectations and ramps up production more than what we expected, then obviously we'll see prices come down. And also, there's also the issue of commitment to the output curb. If the OPEC producers and non-OPEC producers are not able to, you know, commit to this or retain their commitment to this output curb, then we'll probably see prices trade lower than what it is presently.
Okay, so you know, we should hope that this doesn't happen because, of course, this is Nigeria's main revenue earner.
Yes, certainly we wouldn't want to have that on our table, although we already have our benchmark about 42, which gives us enough leg room between 55 to 42. So,
but that's for 2017, so it's not yet implemented. Right now, we're still operating the 2016 budget, and in the budget is $38 to a barrel.